we do speculation. We use this to generate income. I'm going to show you an example. Okay, what are exact strategy? The money. And remember, also when you have to buy those shares, remember again, you can sell your shares for a profit. Agree to sell your shares for a profit, and a covered call, and you can get paid again for that. So even if you had to buy your shares, you turn around and you say, you know what? Maybe I'll sell my shares at this price, and you can get paid for that again, right? So it's very forgiving strategy, which allows you to generate a lot of income. Okay.
Awesome. Great question. Fadi is asking, what is paper money? And can you elaborate on whether or not the strategy is risky? Great questions. Thanks for bringing that.
Yeah, paper money is basically when you're trading for real, but the money is fake. That's the best way to describe it. I would highly suggest everyone do that when they start. Is the strategy risky? Well, if you think about it, the worst case scenario is that you own stock as long as you're not leveraging. If the stocks that you picked are garbage, then yeah, it's going to be pretty risky. But if you pick great stocks, maybe not so risky, right? So it really, really depends on the companies that you're picking. So for me, when I own Tesla and Facebook and Microsoft and Apple and, PayPal and Palantir, Disney, these to me are not risky. Like for me, again, it's not meant to be stock advice. I'm more than happy to own those companies. And if you're going to pay me a lot of money to do it, where do I sign up? So it really boils down to the quality of the business in which you are investing in. That is the key, right? Okay.
Perfect. And then there's a question which I know a lot of people are maybe thinking is this strategy risky? If you could just elaborate a little bit about risk and this strategy.
Yeah, again, think of the risk aspect of it. If the worst case scenario is that you own that stock, then you would have to say, well, is owning that stock risky? Is it? Again, for me, if I think Facebook is going to be worth, $400 a share a year from now, then clearly I don't mind buying it at 345, right? That's the idea. So what is absolutely essential, like I said, and can never be compromised, is the quality of the stock in which you are going to buy. It's great to get paid a lot of money, but if you pick, if you agree to buy dog crap, you're just going to get cheap dog crap, right? But if you agree to buy high quality companies, then you've got a high quality company as a worst case scenario. Again, really good spot to be in, right?
I think that's awesome. And I really like the example that you gave in your keynote around if, new traders often get tempted by those high premiums versus the principles, the underlying.
Correct.
Ray has a really great question. I understand your strategy is great to build portfolio and or generate income in a bull market. What would be your strategy if you think that we are about to enter a 20% market correction or a bear market?
Yeah, we had it last year. I had a 35% correction. We made a killing last year. So same thing again. We remember the worst case scenario is that we own the stock. If our companies are continually making more money year after year after year, where do you think that stock is going to go eventually? So I don't view market corrections as times of panic. I view them as times of opportunity. This is exactly why I have a real estate portfolio. So when the market takes a crap every so often, I can pull my assets from my real estate portfolio and buy stock cheap because I believe in its long-term price appreciation, right? That is the idea.
Okay. Awesome. Erica has a point. She's just explaining that, but you need to be prepared to buy 100 shares if you get called. So I wonder if this is a chance to maybe elaborate a little bit about buying options and what's involved.
Yeah, you have to be prepared to buy your shares, of course. That's why we get paid a lot of money. But if I have to buy shares in a company that I don't mind buying and I got to buy at a discount and you paid me a bunch of money for it, great, right? I don't see the issue. For me, there's no issue there. And if I really wanted to generate more income, I can turn around and agree to sell my shares for a profit and get paid all over again. So again, in my opinion, it's a great spot to be in. So we had that market correction last year, guys. Market was down 35% because of COVID. Out of the blue. Nobody could have predicted it. Who would have guessed, a global pandemic? But because our worst case scenario was that we had to own high quality shares, we held them. In fact, we bought more as the market went down. And when the market recovered, we made a killing last year. So again, that's why we do the things we do. We trade the way we do for a specific reason.
Agreed. And I love it when you usually elaborate about how you sleep well at night, knowing that what you've purchased, you don't lose a night of sleep. That's really important, especially as somebody who's starting out or a new trader such as myself. A great question. I know it's on a lot of people's mind. What is the average expected ROI from your strategy and experience?
It all depends on, again, your ability to pick high quality companies. If you pick crap, your rate of return is not going to be all that great. What's the best way to answer this? It really depends on your individual ability. You can really ratchet this up or down. I've done really well over the years. Like last year, what did I do last year? 55 maybe. The year before I did 62. This year I'm maybe around 40 something percent. I had roughly. I'm not saying those are expected numbers. Oh, good years, not bad years. But over a long period of time, think about it. I get paid a lot of money to buy shares in companies I want to buy anyways. Does that money add up over time? Of course. But that expected rate of return is very different from one person to another, right? Like on Tesla, I get paid 4, 5, 6, 7, 8% a month just to buy Tesla. That adds up over time. But if you're not trading Tesla or trading some other company, well, then maybe you won't get the same premium. It all depends on you, right? But we are fully transparent about what we do, okay? Mike says, but how many people can afford to buy Facebook at $30,000? I agree with you, Mike. And I couldn't either before. There are cheaper price stock. Stock is not the thing. Again, think of the process as more important. You can find higher quality companies that trade for a lower valuation, a lower price, excuse me. But at the end of the day, you have to understand the process and you have to be comfortable owning those companies. We trade a company called Palantir. It's only 21 bucks. So we only need $2,100 to be able to buy it. And I get paid about $125 a month just to agree to buy Palantir. Now I think Palantir will be worth a lot more in the future. So I don't really care. That's the idea. So I hope that answers your or addresses your concern, Mike, about the 30,000. Okay, Christine, next question.
Great. So it's a question from Erica. So she's an experienced trader. She has lots of experience selling puts and covered calls. So she's not sure about the training, but she's wondering about membership or how she might find out more about Theta trading. What would you recommend for someone like her?
Yeah, Erica, I don't know what your level of experience is, but oftentimes I find that people who even say they're experienced, they don't understand the intricacies of how options work. Like the Greeks, the concept of volatility, understanding the concept of volatility itself is a study unto itself. So I don't know your level of experience, but we have an advanced course that is that you don't need to take now, but we tell people to take it in 6 months. You made a bunch of money, you're getting this is a major part of your life. You need to know everything you can. So understanding the concepts of volatility, seasonality, the Greeks in detail, like why should I sell options when volatility is high, for example? So I can't honestly, I don't know your level of experience. Erica, if you want to just email me, omar@thetatradingco.com. I'd love that. We can have a quick conversation and I can give you a better idea. So Christine, would you mind just maybe putting my email address there?
Yeah, for sure. I'll do that right now. And there's a question from Brad. Brad is interested to know can he have somebody from your team manage options for him?
Say that again.
Yeah, Brad would like to know if there is somebody from your team who can manage options for him.
No, we teach people how to trade. We do have a fund that we advise on in Canada. You can, but that's only available in Canada. We have a fund that you can invest in that replicates our strategy, but that's only available in Canada. So if you're American, we don't have that. But yeah, we don't trade for people. Remember, think about why we started this company. We started this company because a lack of financial education really caused problems. It caused havoc in my life, caused havoc in Matthew's life. The reason we started this company is to put people in a position where it doesn't cause any problems in life. So we're an education company, okay?
Great, thank you. And there's a question from Scott. If you are not required to fulfill the contract to purchase shares, do you then purchase the stock or write another put?
Oh, you just write another put. So if you agree to buy Facebook at $3.45 and it doesn't go to $3.45, great. Just keep the $9, do it again next month, and next month, and next month, and next month, until you own Facebook. And the reason you don't care if you own Facebook is because you think it'll be worth a lot more. But in those months, you may have collected who knows how many percent return. It's a really good spot to be in. Like I said, the worst thing that's going to happen to me is I own Facebook and I think it's going to be worth a lot more. Well, where do I sign up for that deal? That's the way I view it.
And a question from Ray. Do you also treat option spreads such as call put credit spreads for small account?
No.
Maybe do you also trade option spreads, I should say. Yeah.
No, it's not because I haven't. I traded every single thing that you can imagine. Trust me. And the reason we don't do this again, because when you trade credit spreads, the loss of permanent capital is real. Okay. So I was on Wall Street in 2010 when the flash crash happened, and I lost $400,000 an hour because of credit spreads. Never again did I do credit spreads because of that, because I violated a simple rule that I never should have violated. And again, I didn't learn it by then, but the simple rules: never put yourself in a position to lose your money. So when you write credit spreads, the ability to lose all your money is there. Okay. It might be small, but it's there. This is why I trade the way I do. It gives me the most amount of return for the least amount of risk and least amount of time spent. Right? Like I travel the world. I love traveling from different, trading from different countries. Remember, all I need is my phone. I can make a crap load of money from anywhere in the world. So my first goal will always be to never lose my money. So for that reason alone, we don't do credit spreads. So I hope that answers your question.
Great. And there's a comment here from Fatty, who is sharing with the group that he is, let's see, I'll read it in his words. I am a real estate investor, and taking this Theta course was one of the best actions I took. The return was many multiples of my investment in the course. I highly recommend it. It's great. That's great, Fatty.
Thanks, Fatty. Thank you, Fatty. I appreciate it. And I hope you guys can see why, right? You know, think of it. You paid a lot of money for agreeing to buy stocks you want to buy anyways. To me, that's a great spot to be in.
Awesome. Great question from Neil. Would you recommend leveraging when first starting out to get involved in options trading?
No. Leverage comes with a whole host of problems. Leveraging, you're basically playing with more money than you have. If you don't know what you're doing, again, I'll go to the same thing. Focus on knowledge. The money, I promise you, will come as a result of the knowledge. It's not the other way around. Focus on the knowledge. As you get more and more comfortable and more experience, you'll know when you can use a little bit of leverage. Like, for example, we use leverage from October to May, but we use it responsibly. Because why? From October to May, the market statistically does very well. So the odds are heavily tilted in our favor. And if things don't go our way, well, so what? We own one company that we wanted to own anyways. So I would highly recommend not using leverage, and when you first start, until you get a level of comfort. And even then, to use leverage very responsibly. It can get you in a lot of trouble. So you must use it responsibly, and you must always focus on your first goal, which is to never lose your money. Okay.
Great. And we have another inquiry. Brad says, I'm Canadian and he's interested in the fund. So Omar, your email address is in the chat. I would encourage anybody to just send Omar a quick email and he'll refer you to the fund that you're inquiring about.
Correct. Yes. And then, sorry, go ahead. Next question. Yes, absolutely. You send me an email. I'll direct you to the fund. Absolutely.
Awesome. And a really great response from Erica. She says she loves it. Of course you do, Erica. That's
Thanks,
great.
Erica. I appreciate it. Thank you, Erica. And Erica, the thing is, guys, I just want to say this is real. This is my life. This is how I got my family and myself out of a bad spot. Not just out of a bad spot, but into a spot where I never have to do a thing again in my life, ever. That's the only reason we were able to start Theta, is because we put ourselves in a position where we didn't need the money. So when we started this company, we didn't know if one person wanted to hear what we had to say or nobody. We had no idea. But the point is, we could afford to take that risk because we didn't need the money. That is a spot I want to put you guys in, where you know how to make money on your own, so that if you do want to do something with your life, you have a passion for something, pursue that passion. Don't live your life with regret. Do the things in life that you wanted to do. You're only going to be able to do them if you don't have to worry about the day-to-day bills. Once that's covered, a whole new world opens up. All these different possibilities. But it's incumbent upon all of us to put ourselves in that position. Right?
Great. Thanks, Omar.
Sorry about my rant there.
No, we love your passion, Omar. We love your passion. And it's changing lives. And then that keeps it, that's the passion. Great question from Les. Where's the best place to do this? TFSA, RSP, non-registered account?
Yeah, so you can't write naked puts, or you cannot sell naked puts in an RSP or TFSA, right? However, you can invest in funds that replicate it, but you cannot do the strategy. You have to be an open margin account if you're doing it on your own. And that's not a Theta requirement or a brokerage requirement. You have to take that up with the government of Canada and JT, Justin Trudeau. I wish you could, but in TFSAs and RSPs, but you can't.
Great. Okay, and then there's a comment from Jordan. Jordan is obviously somebody who has taken the course and has been trained under you, Omar, and your partner, Matthew. And he's saying, I can reiterate what Fatty said. Best decision I ever made was taking the Theta course. Omar and Matthew are awesome people and great teachers. That's Great endorsement. Thank you,
That's
Jordan.
very, very kind of you, Jordan. Thank you so much. I really appreciate it. That's very nice of you, Jordan.
And Les has a great question. Maybe we can get you to just elaborate a little bit on it, Omar. He's wondering, where
Sure.
can you sell puts? So maybe that's linking back to some of the earlier questions about where to do this.
Do you guys want me to go through a little bit demonstration? We have some time here. I can do a demonstration right now. Would you guys like that? Would you guys let me show you a demonstration of how it works?
Yeah, just pop it in the chat.
Yeah, let me know if you guys are cool with that. You guys want to do that or no? Yes,
Yes, please.
All right, let's do it. Let's do it. All right. All right, I'm going to show you. Okay. All right, so we're going to go to Yahoo Finance. I'm going to share my screen. Okay, guys? All right. Okay, so we're in Yahoo Finance here. Okay. All right. Okay, great. Now, let's go to a few different companies. So this is going to look really weird. It's going to look like, oh, it's all this weird numbers, and just I'll explain to everything works. Okay. Here's a trade I will be doing later on today. Okay. Tesla, a company that I love. Again, that is not meant to be stock advice. I own a Tesla. My wife owns a Tesla. So when I do homework on my companies, I do them at a different level. I not only own the products and services, I go hang out at the superchargers. I'm a real nerd with stuff. I only invest in 10 to 15 companies, so I know them inside and out. Okay, now, Tesla's trading $1,137, okay? Fair enough? I think it'll be worth far, far more in the future, far more, okay? Now, that's not meant to be stock advice, simply my personal and our company homework, okay? All right, so I have one choice. I can just agree to buy Tesla for $1,138, okay? Or I can go into the options market and I can agree to buy Tesla. So let's say I go into December 31st, which is about a month from now, okay? Fair enough? All right. December 31st, I'm going to agree to buy Tesla. Remember, it's trading at $1,138, okay? Let's say I agree to buy it for $1,100. And we're going to show you the most, the optimal points where you kind of want to look to buy these things. Let's say I agree to buy Tesla for $1,100. And I know it's a very expensive stock and it costs $110,000. Just forget about that part. This can be done with any stock. The key is the quality of the stock, okay? Let's take a look here. Okay, how much am I getting paid here, Christine? $63.50 a share.
Wow.
Simply for agreeing to buy Tesla for a $40 discount for 1 month. You guys tell me, you think that's a good deal or not a good deal, right? So if I agree to buy 100 shares of Tesla for a month for a $40 discount, the market's going to pay me $6,350 US. You tell me, you think that's a good deal or not? Now, if I think Tesla's going to be worth far more in the future, is that a deal I would take? Of course, I'll take that deal each and every day. Why wouldn't I? You're going to pay me like 6% for a month to agree to buy a stock that I would be buying anyways at a $40 discount? Great. Where do I sign up? That is the idea. Okay. Now you can do this with any stock you want. Let's take a look at a different one. Let's take a look at Advanced Micro Devices. Okay, it's a cheaper stock, $153. Again, we just go into the options here. And again, because we're going to a lot more connectivity in terms of where the world is headed. And, chips are going to be used in pretty much everything going forward. Okay. So again, I'm more than happy to buy Advanced Micro Devices at 153. But I'm certainly going to be happy to buy it for a lower price. Okay. Let's just see what I get paid if I agree to buy it at 150. Okay. Looks like I'm getting paid almost $7 a share. Think of that again logically. Someone's going to pay me $7 a share. Okay. Now, what does that work out to? 691, Christine, divided by 150 bucks.
4.6%.
Okay. I'm getting paid 4.6% for a month to agree to buy AMD. I'd have bought the thing anyways at 153, almost 154. But you're going to pay me $7 a share to buy it at 150. Again, I'm more than happy with that level of risk because I want to own more shares of AMD. Okay. And let's just see what happens if I had to buy AMD. Let's just say last month I had to buy AMD. Okay. Let's say I bought it at 150 and I turn around and tell, you know what? I'm going to sell my AMD shares for a profit. Let's say I agree to sell my AMD shares for 165. Remember, it's only at $154 today. Okay. Just for agreeing to sell my AMD shares for 165, I'm getting paid $5.50 for a month. Think of that. That's over a 3% return just for agreeing to sell my AMD shares for a $11 profit. That is what we do each and every day here. So every single trade we make is a win-win situation. because markets go through these periods where sometimes the market, you get a correction like COVID last year. If you put yourself in a worst case situation where you own a high quality stock, it's a great place to be. Because all you really have to do, as long as you believe in the companies that you're investing, is wait for them to rebound. Hopefully you have more money that you can draw from and you can average down. If that doesn't happen, again, a big market correction like we had last year, as long as that doesn't happen, clearly you can say we can make a lot of money month to month just agreeing to buy our shares. So let's take a look at one more. Okay, let's take a look at what do you like here, Christine? You want to look at Facebook?
I like Palantir. Well, I like Palantir.
Okay, let's go to
Budget.
Palantir. Okay, all right, Palantir. All right. Now Palantir is trading at $19.66. Okay, and again, we think the company will be worth a lot more in the future. It's not done well so far this year, but that doesn't make a difference. We have a long-term projection on where this company will be worth, or where it will be. Okay, so again, I don't know why this isn't pulling up here. It's pulling up. All right, there's a summary. Okay, so there's Palantir. Okay, so it's at $19.64. Okay, so let's say I go to December 31st and I agree to buy it for $19. Okay, that's a 63-cent discount. How much am I getting paid on this, Christine?
All right.
Sorry, I was 19.5. Let's say $19. I'm getting paid 75 cents. What is 75 cents divided by 19?
75 cents divided by 19. It's almost 4%, Omar. It's 3.9%.
3.9%. So I'm getting paid here 3.9% for 1 month for agreeing to buy Palantir for about a 3 or 4% discount. Again, if I think the company will be worth a lot more in the future, this should be a great situation for me to be in. So I hope that makes sense. Just want to see what you guys think of this demonstration. Is this helpful? Does this make sense to you guys? And we have a question here from Ray. I understand your strategy is great to build a portfolio and generate income in a bull market. Oh, we already addressed this question. Yeah, we already had this major correction last year. We did just fine. Again, if your companies are continually making more money, in the short run, guys, the stock market is a popularity contest. It can go in any direction. It could be any rhyme or reason. It could get spooked out by something, interest rates, inflation, who knows? In the long run, companies are valued based upon the money they make. If your companies are continually making money, even if the stock is down temporarily, eventually it will get rewarded based upon the money it makes, the earnings. And this is why we stick to these high quality companies that continually, year after year, make more and more and more money. Okay. And that's what we do each and every day. That's all we do. And then we take this money. Sorry, go ahead.
Oh, sorry. No, finish your thought.
Yeah, I was going to say, again, all we did over the years, myself and Matthew, to get ourselves out of that, that terrible position that we were in, like student loans and all that stuff, is every time we'd make this money, right? Like, let's say I did this. If I did 100 shares on Palantir right now, I'd get paid $75 US. That might not sound like a lot, but it adds up over time. 75, 100, 200, 300, 500, 1,000, 2,000, 5,000, 10,000 a month, and then so on and so forth. The next thing you know, you're making like, who knows, you're well into the 6 figures per month. But it starts off from nothing, right? Now, what we did over the years is we simply took these premiums that we received and we would systematically go buy real estate. Every so often, we found a good deal. And now that's the position we're in, is where we've got that great real estate portfolio that we can draw in from time to time if we need to. And we've got this great stock portfolio, option portfolio, which generates us monthly cash flow. So we use the positive cash flow from our real estate. We put it in our trading account on a monthly basis. We spit out more cash flow. And when we find a good deal, we'll just buy some more real estate. If we find a good deal, the difference is we know how to evaluate 2 asset categories, and we can independently look at and see where we think a better rate of return exists for us. Risk adjusted, of course. So again, it's a great spot to be in. All right. Do we have any more questions, Christine?
Yeah, there was a great question from Scott. He's wondering, how are the gains taxed?
That's a good question. For most people, Scott, it's capital gains for the vast majority. But it's individual. If this is all you do for a living, the government could argue it's income. But for the most part, it's taxed pretty favorably. But that's again, you must consult your accountant.
Fantastic. Right. And then there's a question from Neil. How do you sell the stock at the increased value after 30 days if you don't own it initially?
You do own it. The idea would be the only way you're selling your stock is if you do own it. So that's why it's a covered call. Covered means you do own the stock. Naked means you don't own the stock. So let's look at our process again. We agree to buy a stock which we do not own at a certain price, which we get paid for. That is a naked put. Naked because we don't own the stock. These are not my terms, by the way. So guys, I didn't come up with these. So just remember that. It's not me. These are industry terms. Okay, so naked means we didn't own it. Now let's say the stock went below the price we agreed to buy it for. Now we had to buy it. Great. Now we can do a covered call. The reason it is covered is because we now own the stock. Okay, so I hope that explains it. If you need any further clarification, I'd be happy to address it. Okay. Next question, Christine.
And then we have just a great comment from CJ, thanking you for walking through the examples. Of course, this is complicated stuff, and it just really helps to have somebody walk you through, and the examples that you provide always make it that much clearer to follow. So thank you, Omar. You are truly a great teacher.
No problem. It's easy to walk people through examples when you have lived it yourself. This is my life. I lived science, so I know. I can tell you guys, I know each and every step along the way from a 19-year-old kid with no money and student loans. I know exactly each and every step along the way, and I know it's doable. So I really hope you guys take the time, even if you don't join the course. Just take the time to learn how to do this. It'll change your life if you take it seriously. Okay.
Awesome. And so a great question from Scott. When is the next course?
The next course, we just had one last weekend. The next course is February 19th and 20th. But the minute you enroll, you can start watching the last course. They're all recorded and they're broken down by chapter, sub-chapter, and then you can start joining us for our coaching calls on Friday. Your 6 months doesn't start until the next course. So if you join now, you get the next couple months for free. That's kind of how it works until the live course, and then your 6 months would start. But basically, if you join today, you can start watching all the videos, like the 2 days of training, the 2 days of live class. We've recorded those. They're available in our learning portal. You watch them along with the 300-page PowerPoint. You self-educate, and then you join us on the Friday coaching calls to reinforce the knowledge. And you wait for the February 19th and 20th live weekend. It'll be the exact same course, but it'll be live so you can ask questions. And also we have our Facebook community of almost 1,000 people where if you have a question, just ask them, hey, what do you think of this trade? Or what do you think of that idea? And people are more than happy to respond.
Yeah, great community. It really is an amazing community. Thanks, well explained. Is the course fee in Canadian?
Yes, it is. It's in Canadian dollars. That's correct.
Fantastic. Great.
All right. Looks like we had a lot of great questions. I hope you guys learned a lot. And I hope this is eye-opening for you guys. I really do. I hope this has opened up some eyes in terms of what you can do if you're equipped with the right knowledge. When I was working, it always scared me. I'm like, am I going to have to do this the rest of my life? I didn't want to take that conventional, retire at 69 and then live for another 5 years and things fall apart. I was like, this is a terrible deal. So it was either take the conventional route, but I know the conventional route gives me conventional results. I wasn't looking for conventional results. I was looking for unconventional results. So I had to take an unconventional approach. This is the approach we took, and this is the approach that changed our lives. Okay. So I hope you guys learned a lot, and I am more than happy to ask any questions. And we're very transparent about what we do here at Theta. So if you guys have any questions whatsoever, just shoot me an email at omar@thetatradingco.com. I'll be more than happy to address those questions. Otherwise, thank you guys so much for your time. Any closing comments, Christine?
No, Omar, I think it was a great presentation. Great to have the engagement. I'm so glad everybody was able to join and stay with us here. Omar will be live again tomorrow. We will be offering a Zoom trading demonstration Q&A tomorrow at 11 a.m. So come on back if you'd like to join us. We'll be doing some more trades, and Omar will be talking to you a little bit more about what he does at Theta Trading.
Yeah, live trades tomorrow. That should be fun. You get to watch some live market action. But it's not as exciting as it may seem. Once we agree to buy our stock, there's not a lot much more to do. We just kind of collect a bunch of money and wait it out, right? Like if I agree to buy Tesla for 30 days, well, either Tesla goes to 1,100 or it doesn't. I keep the $63 no matter what happens. So it's going to be fun. You guys are going to see how the mechanics work, but it's not like your traditional day trading. It's not super, super exciting. But I hope you guys join us at 11 o'clock. You will learn a lot tomorrow, and I hope your eyes start opening, your mind starts opening up of all the potential things that could happen in your life if you understood how to do this on a regular basis. Okay.
Fantastic. Thanks, everybody. Thank you, Omar.
Thanks, guys. Thanks for joining us today.